Hey, what is up, dudes and dudettes? This is Dudediligence here, and today we're gonna talk about MMAT again. Because yesterday I found some very interesting things when I was digging through the old SEC filings, and a lot of my Discord members and Patreon members were asking us whether it's a good time to enter or not, or what do we really think. We can't really say what we really think because nobody really know where the market is gonna go. If you go on the street and anyone tells that they know that where the market is gonna go, they're either a genius or they're God. So or they cannot be a genius because it's absolutely impossible. Because a lot of the volatility side of things are really impossible to really predict in the short term, but you can predict in the long term. Anyways, so for MMAT, I'm going to give you guys a number from the SEC filings, and it's really based on how accounting standards are set up. And basically, the CFO's perspective, the auditor's perspective, actually, they haven't been audited yet. So the CFO's perspective on their actual fair value of what the stock price is actually going to be at. And this is one of those old filings that you can actually dig and sort of build a base valuation on per share basis based on convertible debt. But without further ado, let's just get into it, okay? So I want to drag your attention to this filing, okay? It is I think this is the last 10K or the 10Q from the merger. So this is like the 10Q merger where it explains how convertible instrument and convertible debt were calculated. And it also explains why they incurred a estimation of fair value loss of $40 million dollars in instrument. Okay, and in here this is only a portion of the loss, which it only explained the loss of the $23 million loss in here. So I want you to drag your attention to this clauses right here. Okay, and I will sort of dissect it and tell you guys the logic of it, and whether you believe or not, you should probably only do your own DD and do your own calculation, and sort of based on our DD and our calculation and everything we conclude in this video, make your own financial decision. Again, we're not financial advisors. We do not get financial advisors. Everything we share on this channel is for shits and giggles. And of course, for entertainment purposes and also for education purposes only. Okay. So on February 16, 2021, MMAT actually took out a bridge loan. Okay. The bridge loan's principal is $4 million. In reality, it's actually $5 million principal, but in other disclosures up there, they talk about how, literally how it really works in terms of how conversion factors, how deduction works and everything. So let's just take $4,361,000 as its face value. So that's the principal, and accrued interest. And then, so basically how this deal was set up is, so let's just say party A, we actually don't know who gave them the loan. Party A gave them a loan for approximately of 4.5 mil, right, in dollar amount. And then in reality, it's actually a $5 million note, okay? But we want to go into detail of where does the 500K actually go. There are other conversion factors in there. And in here, the party who gave them, the debt party, the debtor. Is it called a debtor or the loaner? The loaner of the loan, okay? The debtor of the loan, whoever, the creditor, okay, we call them the creditor. The creditor of the loan decided, hey, because you guys are going public, we know that the only way that you can save your company from bankruptcy is going public. So we're gonna make this into a convertible debt. So how are we gonna convert it? Everything, we're gonna convert it to Canadian share, a Canadian dollar of $0.5 per share. And we're going to convert our principal and all of the accrued interest that you get from this loan. And by the way, this loan has a really high interest if you actually do the implied interest rate analysis. But in here, we're not going to do that because we're trying to keep videos short right now. Okay, into 20 million worth 20 million shares, almost 20 million shares of common stock, okay? And then in this disclosure, it's going to talk about when they convert and then at what price they're going to incur this much money, a $19 million of loss. Okay, so how this calculation works is, so if you do 0.5 Canadian dollars times 0.81, because back then 1 Canadian dollars equals 0.81 dollar, you will get about 0.4, right? About 0.4, 0.45 US dollars per share, okay? And then you time that 0.45 US dollar share to 20 million this here. We can do this calculation right now. So let's do, where's my calculator? you do 0.5 times 0.81 equals 0.4. Oh, never mind. 0.405. Okay, it was totally my bad. 0.405. Okay, 0.405 times, what is this? 20,591,239. So that give you a fair value of 8 million. So we do, I'm going to record it because you like me to record it, right? Times 0.81 times 0.81 times, what is this? Times 20,591,239 equals to 8 million, 8.339 million. Okay. This is how much money they will get. So basically they converted their principal of almost 4.36 million plus interest. Let's just assume the interest is, right now it's probably almost like 4 million at this point, 4 million. And then they converted it into the 8.339 million stock options, basically stocks, in stocks, okay, in stocks. And then because they went reverse merger with Torch, therefore in here the accounting standard here is when you're accounting for the loss of conversion to common stock, the CFO or whoever making the statement have to sort of give the SEC a guidance, which in here they don't explicitly say what the guidance price point of their stock is. So they're trying to do a sort of like a guidance price of their stock in here. And then we can deduct it by looking at the fair value loss. So they converted all of these debt into the common stocks that worth 8.399 million, right? And then because the conversion, they lost about 19 million in this conversion. So we add that 19 million. 8.339 plus in here just 19.136 million. You will get whatever on the date of conversion, how much fair value, how much actual monetary value all these stocks were worth based on the benchmark per share basis or per share price that MMAT think that will happen 70% of the time with a 70% likelihood. So whenever you're dealing with accounting standards and we're dealing with GAAP standards, all of your fair value loss calculation are based on your company's benchmark in terms of what your fair value price is at during the time of conversion. And even if the market price is at $9, if you think your fair value price is at $1, when you have a 70% likelihood of chance in terms of because you're an internal holder, internal insider, you can use that to calculate your loss. So in here, we do that plus, let's just do it simpler, 8.339 plus 19.13, that 27 million. And this 27 million represents 20.391 million shares. So every share in here technically is 1.34 on the 1.34 basis. So on a per share basis, this is, so basically what CFO of MMAT in here when he's basically issuing this document is on the day of this document was sent out, they estimated that there are 70% chance, there's 70% likelihood that the fair value of MMAT is at that price, is at 1.34 per share price, okay? And this is why I'm gonna name this video, is it planned from the beginning or something like that? Because if you go and look at MMAT's price right now, it's traded somewhere around there. So we actually overlooked this when we're doing calculation, and it's probably a very good idea when it was at $10 to buy puts to the price where it should be at. And what is more interesting here is this is not the end yet. Because if you check the date, okay, if you check the date of this document is posted for the quarter ended June 30th, 2020. So then there's another question in play here. So the reverse split happened when the merger closes. So the reverse split happened on June 28th. So the question in here is whether during the conversion, okay, where's the conversion here? During the conversion happened actually, technically speaking, on February, okay? The conversion agreement happened on February. And then if they converted on February, that literally just means that the reverse split haven't happened in terms of when they go inside of when the torch merger happened, because torch merger happened about 4 months later. So then when you accounted for that, you have to account for 50% of the value being lost because of reverse split. So if you do that math, you will realize that the actual safety base conversion price per share is at, well, let's use the calculator because obviously you guys don't trust my math here, is at $0.67 per share. But in reality, you have to time that by 1.8 because every 1 share of MMAT will get 1.8 shares. Does that make sense? So in reality, the price is gonna be in the bull mark in between. So let's just say the price is a variable X. Then the price will be but the actual fair value will be bigger than 0.67 and will be smaller than 1.206. All right, here you go. This is the range here. So we use the range to sort of draw the map for MMAT 1.26. Okay, let's do this. 1.26. We said 1.26, right? Yeah, 1.26. Right here. And then when we go out a little bit, we draw another line. What would it say? What did we say? 0.67. 0.67. I'll just do 0.69. Okay, just for the sake of it, and not like that, just like that. So ideally, or if in terms of like a fair value basis, ow. Sorry about that. We are supposed to see MMAT trade into this range, okay, into this enclosed red line. And let's not use red. Let's use another color that's more user friendly. Let's do. Did they have pink? I don't think they have pink, did they? This is close enough to a pink color. This is close enough. This is close enough. Okay, this is close enough. And let's make it bigger, because everybody likes bigger stuff, right? So in this range. So ideally, if the valuations are correct based on their balance sheet, then the stock would trade into this range. Okay, and obviously when it goes under $1, and then the SEC will send them a delisting notice, and they have 180 days to basically make a decision in terms of like whether they're gonna get delisted or they're gonna do reverse split or whatever. So then when it reaches a dollar line is right here. I will just draw the $1 line. When a dollar line was reached, there are probability of another pump or the probability of reverse split. And when a dollar is reached, depending on how far the line we got in here, depending on how much money retail still have left, you might have a pump or reverse split will just be inevitable unless they are trying to risk their listing. One of the reasons that they reverse split is because they're afraid that they might encounter either a heavy short attack, or they realize that their true value isn't the price that they're trading at, and they're worried that they're gonna evaporate about 60% of their entire shareholder value. Therefore, they did a reverse split, and then it got them almost half a year now. And then there might be another reverse split. They're probably not going to do another offering because there's no point of doing another offering because it's a cash scarce market and they have cash on hand. So most likely is bang, go down to 1, bang, it will keep going down to about 0.67, or maybe not, or maybe you will have a pump around next week when everybody thinks the market is just doing fine, inflation is not going anywhere, and then it will go into the pump. But then the pump is, even if we have a small pump right here, The highest it will ever go would be like $3-ish, okay? And then later on, it will just keep going down and towards $1. And then when it reaches $1, it will have a reverse split. And then we will see what happens after the reverse split. And this is it for the video. Hopefully you guys love it. Smash a like button and subscribe. If you have any questions, comment down below. If you're new here, also comment down below, because we really love to hear your questions, especially when you're new, when you don't know what MMAT is. And if you have any specific MMAT questions, we will answer them. And later on this month, next month, I might do a collab with Bronco, which is a very active community member in our Discord. And we might also do a collab with Spot On Analysis. We might or might not talk about MMAT, but everything are still in a basket. See you guys on the upside.